We got that little special secret sauce that we have what we call our portfolio division with that non-warrantable stuff that we do.
Just because you go to buy a condo and it doesn't check Fannie and Freddie's boxes, which is tiny, right, does not make it a bad project.
Give the message out to people watching this, not just in Louisville, Kentucky, across the country, on the coast, all of our real estate partners.
People not putting any money down. They weren't checking any documents. They would say they made 50 grand a month and they're like, you've got a 700 credit score, approved.
If I save 2 cents, I am going to go save that 2 cents and I don't care who I work with.
All right, guys, welcome back to the closing table. You're here with the Funding Fathers. My name is Tyler Jenkins.
Jesse Cronin.
Boom, baby, let's go. Spring break. Where you going? What we doing? We on the
Spring break
beach?
edition, baby.
No closing table. This is the beach, baby.
Yeah.
I always wonder, do people with kids that aren't in school get spring break? And obviously Tyler is a classic example.
It looks like he is. I don't know.
Break.
We made our own spring break, except for we are going the week after. So we'll be in Jamaica for not this next week, but the week of the 13th.
No.
Who's keeping the boys?
It is a team effort.
That's the best way. That's how we
moms
do.
on both sides. Yeah. Just family.
Hey, listen, it's Jamaica the week after. Listen, spring breaks across the board. No certain week for that, you know.
It's somebody's.
I'm ready.
break.
I got my flops on, baby. I got my flops on. I'm boarding the plane.
Chad's already on spring break.
Let's go. I'm all right.
Chad lives on spring
I
break.
live
He
on
has the
spring
lodge.
break, baby. Let's go, the Montana Lodge. So now I'm excited to be back here, guys. We got a lot of stuff to talk about. Where do we go? I mean, a lot to talk about.
Well, we can start by talking about the age-old adage: if you'd like more business, plan a vacation.
Yeah. Dude, I was, and it's funny. I think a lot of people in our industry, like realtors too, same thing. Like I was joking with a couple people this week, and they're like, "My God, I'm going on spring break, and I haven't been busy in 4 weeks, and all of a sudden I'm getting busy." And I was just joking with you guys last night. Like my first 2 months were crazy busy. 2 of the biggest months I've had. I went on a 3-week, like it was like, what happened? And in the last like 7 days, I think I've gotten probably 17 contracts. Like it has been insane. So Tyler, I think, Jesse, I'm telling you right now, I might, after this, I'm going to evaluate. I'm going to tell you right now, we'll test. After this spring break, I might get with T-Bone, see Trish. Man, we picked up so much business. We're taking a 3-day trip every month.
I've been saying that
every month. I'm just going to pick, hey, we're going on a 3-night trip, and I'm going to do it. And if it keeps working, then I'm on to something.
Force the action.
I've been rolling that since December. So I mean, if you go back to December, I took basically the Christmas and New Year's off. Like you were with me at the lake, right? And then January we went on our trip. February I was out of town twice. March I was out of town. Like you're saying, it works. Now obviously we work when we're gone. Our phones ring, we answer them, but like it's wild. You schedule that trip and it happens. And
unfortunately, we have to work.
I guess that's a good point too, because I've had the best start ever, and we did January, and then I went to Punta Cana after that.
Yeah.
Where else did we? I feel like we went somewhere else. But yeah,
Oh yeah.
Yeah.
See, that's probably why. That's probably why my March.
Gorge? Yeah.
That's probably why my March wasn't as good as January and February. Because in December I was somewhere, and January's in Punta Cana. I didn't take a trip in February.
That's T-Bone's fault. It's T-Bone's fault. And
Problem fixed, baby. Let's go.
Thank goodness.
Let's go.
Thank goodness your second favorite travel agent got spring break set up, or you wouldn't be busy because I scheduled spring break. Yeah,
looking
leave
forward
it to
to it.
T-Bone, you wouldn't be busy right now. So
what's good on the market, guys? What are we talking about? We got a lot to talk about. I don't know where do we start? Where we starting at? Because I mean, between market volatility, bombs dropping across the world. Changes, world happening, condo changes, big condo changes. Good for North Point Bank.
Yeah.
Bad for a lot of you brokers.
I think we hit on that. That's huge.
Yeah, all right, let's jump into that. So, Jesse, I'm gonna defer to you on this to kind of get us started here. But the world of condos, we already know that word in general creates fear amongst 99% of the industry. And with good reason, because condos are their own different animals. Well, guess what? That tiger just went to a lion, baby, because the changes just went up, took it up a notch. Bad for most of the world, good for us. And let's talk about why.
Fannie and Freddie hate condos. I mean, let's just call it what it is. They hate condos. And so, they changed it to where 10% used to have the limited review. There are no more limited reviews. So
meaning, real quick, expand on that just a little bit more
think about you get your temperature taken at the doctor. You get a full-on,
right.
What's that called?
Full physical.
What's that called where you drink what's that called? You did that where you drank it on the wrong day?
Oh boy.
Yeah, let's talk about that, Chad. No. What's that called?
Oh, for my colonoscopy.
Colonoscopy. So a limited review would be like you get your temperature checked. A full is like getting a colonoscopy.
Correct. There you go.
Chad knows all about those. He's that old that he's at that point.
I'm healthy, baby.
Hey, I've had 2.
47, but healthy.
But what that means is you go through bylaws and budgets and all the different things to find out everything on a condo. Previously, at 10%, that went away, and now everybody has to do it. And why that's a big deal for us, guys. I mean, listen, if you're out there in the market, if you don't already know, our condo team is second to none. And so,
well, key operative word there, condo team. Like
that's what they do.
We
all
legitimately
day.
like this is not a person that just happens to handle condo requests and send. We have an actual team.
It's not even a person. You have at most places when we were Commonwealth Bank, you fill in the name of the lender. The underwriter is expected to go through and look at the bylaws and the HOAs, and they're supposed to understand litigations. And our underwriters don't look at them. The condo team, we have a pro. Caitlin is a pro that runs the condo team, and her people go through those. And so back to what's going on with the new changes, there are going to be so many condos now that don't meet the guidelines for Fannie and Freddie, and we can approve those because we have such an appetite in our portfolio. You know, we talk about doing 32% of our entire 2025 production in the portfolio. Like that is our condos.
Yeah.
Up 4%.
Well, Tyler, give the message out to people watching this, not just in Louisville, Kentucky, across the country, on the coast, all of our real estate partners or realtors that aren't using us right now on why they will eventually be coming our way at some point because they're going to need us.
Yeah. I mean, it's just the laxed qualifications for it. I mean, that's what it is, right? If you don't, to his point, like it's not quite just only getting your temperature checked. It's like when you just do your regular checkup, right? It's a little more involved, but it's not a full-on colonoscopy, right? And we have more say-so. You know, maybe it's really close to fitting, but not entirely. If it makes sense, I tell everyone, we do make sense underwriting.
Well, it's as much about the client.
Correct.
So you what you're saying, and just to kind of reiterate, we look at the entire picture. It's 2005 underwriting. It's old school, small town, Lebanon, Kentucky underwriting. It's not Fannie and Freddie's. Here's the rigid box, because if it doesn't fit the box with Fannie and Freddie, most people just can't do it.
But the elephant in the room here, boys, is we got that little special secret sauce. That we have what we call our portfolio division with that non-warrantable stuff that we do.
Oh yeah. No,
right?
Yeah.
That's what I'm talking about.
Yeah.
I mean, like
to name it specifically, yes.
Non-warrantable, right? That's what I was looking for.
Yeah.
I mean, so again, we've talked multiple ad nauseum about running from condos in the past and running from self-employed clients. But non-warrantable condos is something that we do great. Like we welcome them. Again, it depends on the borrower if they fit. But that's why I'm saying, like, we're going to be getting calls. Not North Point Bank, not just us three too. I mean, we always get calls, right? We're awesome. What can I say? But no, I mean, North Point's going to be getting more calls. Period. End of story. Because hey, this condo doesn't check the box anymore because Fannie Mae just changed this guideline, that guideline. The reserves just went up 5% or whatnot. How are we going to get this done? Yeah, you got to go non-warrantable. Who does that? North Point Bank. So that's why I think the message across to our real estate base, you may not be using us right now. That's fine. You may have your guy. And I'm not saying we're going to replace people, but you're going to need us. You are going to need us.
Yeah, we're going to fill a hole
for sure, because that's going to be the difference. And I'm going to parlay a second, Jesse, I'll let you talk on that. Parlay that into the 32%, I like to call it right now.
Well, and real quick, so people understand what a non-warrantable condo is, because I know a lot of realtors who don't know what a non-warrantable condo is. Just because you go to buy a condo and it doesn't check Fannie and Freddie's boxes, which is tiny, right, does not make it a bad project. Tiny box, right? And so my point is you could have something that there could be litigation where you could have one of the owners in the building that's suing the HOA because they didn't let them bring their cat when they came down to the condo. Like there are things like that literally derail condo complexes. So it's not that we're lending money on condos that are falling into the ocean. These are deals that should make sense. Yeah. They're clients that should make sense. HOA litigation, deferred maintenance that's going to be completed but hasn't
Co-insurance.
Co-insurance is a big deal, like in Louisville for sure.
Well, yeah, because they're all trying to save money. So they want cheaper insurance that doesn't meet the guidelines of what Fannie and Freddie require.
Well, you got the RC, right? So you got the replacement cost estimator, and these computers say that a building, is going to cost $70 million to be rebuilt because they're basing it off of the inflationary numbers of 2021, 2022. the insurance company and the HOA and the condo get together and they go, you know what? We think it's only going to cost 50, so we're going to do co-insurance to where we're going to split up.
Yeah.
We're not going to get into the weeds on it. My point is if you are a client or a realtor who hears from your lender, nobody can lend money on this, give us a shout. I mean, that's what it's about.
It's what it is, and it's just education right now, boys. I mean, like we need to be out educating. I think this podcast is, hopefully they're watching this right now, and this might not hit home right now. In 12 months, 18 months, 6 months, 3 months, whatever, it's going to hit home. You're going to get it for sure. I mean, because it's just, Louisville's not a huge condo market, but it's bigger than you think it is.
Oh, yeah.
And you're going to find out.
Let's talk about the one thing that I actually loved about it though was the not having any review if it's 10 or less units.
Yeah.
Yeah.
Because
so small. So yeah.
So which in our market we have plenty of. Like that's not that abnormal, right?
It's kind of wild. It's kind
great
of
to
wild
know
that they would. Here's my 2 cents on this. It's kind of wild that Fannie and Freddie would remove it on that, because if you've got a building with 4 units or 10 units versus a building with 100, think about this.
Losing 2 or 3 people.
Think about the
makes no
economics.
sense.
Think
Yeah.
about the
I know what
economics.
you're
If
going.
you've got a building with 8 people, 8 owners, and you have a catastrophic loss, you're splitting that up over 8 people.
But I think the thought there is because the size, like the CapEx is likely a lot less than a 50 unit building.
No doubt. I agree with the thought there is, but if you've got let's say it's one of these buildings like where we are right now, Norton Commons, and let's say that there's an 8 unit building and they're all, say they're $700,000 condos.
Right.
And there's some sort of issue, you're only separating it or dividing it over that many people versus if you've got a development that's 300, even if 10% of those people can't afford, you still have 90%, which is 270 of those people. So it's wild. We don't need to get into this. We could talk this whole thing on.
I was going to say,
Well, but
it's a good point. It's all good. It's good talking points.
But,
I mean,
but I also
that's
think
how deep it is.
This is the last thing I'll say about it, because the people get so confused. Like they don't understand like why it's so important that we underwrite the HOAs. It is to protect everyone.
Everybody.
Like it's not just even about us. It's about you too, because ultimately it's about resale.
Oh.
We want to know that if we're lending X amount of dollars, if you decide in 3 years that you don't want to live there anymore, you want to move somewhere else.
Does it affect the future market?
Can you sell this later?
Yeah.
And if they're
100%.
not taking care of the building, if they don't have reserves,
Why condos are risky.
and not just from is the building going to be okay, but even more so now because of these changes, it limits their buyer pool if it can't go Fannie Freddie, right? It's either cash or you call us.
Yeah.
And here's the thing, and we will get off this, I promise. Having people, seriously though, having pros that not only know how to navigate the market, but own condos. Like I can tell you firsthand, like if a client calls me and they say, hey, I'm buying in this building, the first thing we're going to look at is, do we talk people out of deals? No. Do we educate people on, hey, have you thought about what happens in the event of this or what happens in this? And so that's where we come in. That's where we come in.
You're looking out. They might have an issue in 3 or 4 years, and holy interest rates.
Yeah, it's wild. So let's flash back.
I keep saying I've never seen anything like it, but
we've seen something like it, but
let's go back
reason.
60 days. Let's go back 31 days from today.
31
days. 31 days. 32 days from today.
Holy moly!
The Freddie Mac survey data. We were sub 6, right?
Yeah.
Depending on your credit, blah 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 blah. Sub 6. The 10-year treasury was hovering around 3.8, right? 380, 381. Everybody in America, how many clients did you have? How many clients did both of y'all have that said, I don't want that 5.875. I'm waiting until they get to 5.5. No, they're going to 5.25 by summer. How many people?
Oh,
how many people?
Several.
Right? We're waiting.
And listen, I might have been guilty of it as well, because someone was like, what are you doing? I mean, I don't ever talking about out of it, but they're like, what do you think is going to happen? I don't know. Maybe they do go lower. But I didn't expect.
Yeah.
Well, I didn't expect the boom. Yeah. Like, you were talking about booms.
Yeah,
a lot of booms.
I didn't expect what happened.
A lot of booms.
So rates are a sub 6, and then the big boom happens, right?
Big boom.
We start, the Iran war conflict, whatever you want to call it, starts, and the 10-year treasury goes boom. So 380, what did we hit? 440.
I love all these booms right now.
4.4 something.
446, 444. I think at one point it was almost 450, but it came back. But you want to talk about conspiracy theories, because y'all know I love a decent conspiracy theory.
The boy does love conspiracy theories.
Question for you guys. What did President Trump tweet, truth, whatever, what did he talk about mortgage bonds in January, which kicked off rates falling?
When
What
he
did he
was
say?
talking about buying the mortgage-backed securities, is what, 200 billion? I think
200
was
billion
the
from
number?
Fannie and Freddie, and
They were
he
prepping.
was going to have his people.
They were prepping.
He was going to have his people.
They knew.
And so what that did, you guys know this, but like to the average, average person who's not a nerd like I am when it comes to bonds and everything, mortgages, what was going on there was when they talked about buying bonds, even though it didn't happen on day one, when they talk about buying $200 billion worth of mortgage-backed securities, it normalized the spreads. It narrowed the spreads. And so what that means is when the boom happened and the 10-year treasury did this, if that hadn't happened and we hadn't had normalized spreads or narrowed spreads, which I won't even get into what that means, but had they not done that, we'd be in the mid sevens right now.
Yep.
For sure.
I saw a post by Logan Motoshami.
My
who
guy,
we'll mention a few different things,
Logan
'cause,
Motoshami.
Listen, if you want to nerd out, like that's a guy to follow because he is
Best hair.
spot on
Best
with
hair.
great hair.
Wolverine.
Great guy.
I
Wolverine.
love great hair.
But he
You did.
I never had great hair.
he was talking about he made a post and he said if we had the spreads that we had in 2023, we'd be at like 7.5, 7.65. If we had the spreads from 2024, we'd be at like 7.3, 7.5. Is what
And
he
what
said.
the spreads are is the spreads are the difference between mortgage-backed securities and the 10-year treasury, which is really what drives rates, right? So back to January, he says that, and you've got to think like we America don't just wake up on February 28th and say we're going to go to war with Iran, right? So there's
Hope
got to
not.
be
Was
some.
that before or after?
sure hope not.
Was that before or after Venezuela?
Venezuela was after the bonds.
So I think it was a prep for both.
Oh, I'm sure. Yeah,
Now that you say that, I didn't even think about that. I was thinking about just the Iran stuff, but I think
I'm sure
it was a prep for both.
So yeah, there's always something
a
behind
hedge.
something. I mean, it's just. But back to the
But
market.
it's interesting because, I mean, one day you wake up, and this isn't just us. We don't see rates. I mean, our people, anybody can pull up the internet and go to Mortgage News Daily and see what average interest rates are, Freddie Mac, whatever. You pulling it up, and you're like, hello?
Yeah.
What just happened here?
It was also odd too, because I remember when they announced it, the rates didn't move. Like we didn't really see a whole lot of movement from that. Like I saw more movement between CPI reports, so consumer price index reports, just inflation, and labor market reports.
Yeah, jobs.
I saw way more movement from that, but you would think if bond traders also understood, I think, which is to your point, that one, that wasn't getting injected all at one time, day one.
Yeah.
And my guess is they may have also understood that there was something else going on. Because normally with something like that, you see like a quick like drops for a couple of days and it bounces back up. It hardly moved.
Well,
I
what's
remember thinking about it.
You know it's wild, and what I'm going to talk about. You were, I think, 9 years old. So, no, you'd have been 14. You'd have been 14. You were born in 95, not 2000.
Yes.
So,
Good heavens.
in the crisis of like 08-ish, you remember this world? We saw chaos, right? But we didn't see the 10-year moving like it's moved, like we've seen over the last 3 years. We talk about sometimes our economic system is acting more third world-ish. Well, you don't see a 60 basis point move in the 10-year treasury in a couple days, right?
Crypto coin now.
So, but now with the age of technology, because everything's so instant, you see people trade off. Everybody else sees what's going on. In 2008, 2009, rates moved. Now they went the other way.
Well,
they went
but we
down.
have more retail traders.
That's
now
what I'm
too,
getting
though,
at.
right?
That's what I'm
Like
getting
people-
at. Yes,
yeah,
instant
like
on your
didn't have that.
phone, and so it's good and it's bad, right? So that like instant is one of the reasons we see that volatility, like you see in crypto, even in the bond market. So I could nerd all day on the bond market. We don't need to get
It's
into
the
that.
same with stocks, though. Like
Yeah.
you see overreactions on news all the time. I can't tell you how much money I've made in the stock market off people just overreacting to news that doesn't actually impact the fundamentals of a business.
Yeah.
Like they're having an instance of increased expense. This doesn't change their overall like debt structure or expense structure moving forward. A perfect example. I'm not a financial advisor. This is not financial advice. This is for education and entertainment purposes only. A perfect example is something like a stock like UPS, right? It's getting beat up, or FedEx, whichever one you think wins that race. It's getting beat up because of increased fuel costs because of oil. It's not going to, oil isn't going to come back down, right? So something like that, to your point, because you can tell that it's more retail than it is big
Yeah.
big investor
Based on the
moving in and out,
how many
based on the
shares
movement
per-
and the because you can see the
volume.
volume, right? And it's a very interesting.
Yeah.
It does it changes dynamics of the market.
Well,
a lot.
COVID was interesting because it made people, the average person sitting at home became your average trader, right? Which is
Or
good and bad
or
for the
crypto
market.
scammer,
which is good.
depending on-
Yeah.
A lot of TikTok millionaires.
NFTs.
Now. I mean, NFTs. Now that was the biggest. Now, listen,
the metaverse.
I'll be honest with you. I am not a nerd on a lot of that stuff because it's just not something that interests me. So I don't get too deep into stuff, right? I mean, crypto, I invest and do some stuff like that, but I don't dive into that. It's just not my thing. And I honestly, I read a lot of newsletters. And NFTs, 4 years ago, 5 years, I don't know, 4 years, maybe 5.
I saw one Logan Paul bought for like 4.8 million.
I wanna know how many-
What's it worth now?
$160.
I want to know how many Gary
So,
V's. I want to know how many Gary V's got.
You're buying digital tokens. They were buying like a digital art piece. And I'm like,
Dude.
what do you, I still, to this day, I needed someone to like, what in the God's
Okay.
are you buying?
I am so glad that you all brought up this because I was listening to a podcast this morning. I can't remember who it was. Oh, it was Diary of a CEO.
Okay.
And he
It's a
had
good
on this
podcast.
lady who's in the AI world, and he's talking about how bad the AI industry is fleecing. Not that it's not happening, right? But he goes into the Sam Altman and all the different
Well, the
things about
circular investment, right? So it's money that's moving. It's like OpenAI is investing in this, but this is investing in this that's also owned by OpenAI. Like it's literally like this like feedback
but
loop.
she talked about how like when they went to this, when they went to go get money from this place, they knew that they wanted AI to make us be more efficient. And this place, it's more about, they're catering to the different like industry. And
calling
then
it all
when you look
AI.
behind the scenes, what she's going into basically is like, I won't even get into the what she feels about what AI will do, but just how we're getting fleeced again because it's all about the money. So it was pretty wild. Diary of a CEO is a pretty. I know
It's
you
a
listen to
great
him.
podcast.
Yeah.
No, I'm a big fan of it.
He's a dude, and
He asks
made
good questions.
He made a good point. He goes, it's funny. Sam Altman will go on Rogan's. He'll go on Tucker. He'll go on all
come
these.
on here,
He
though.
won't go on Diary of a CEO.
Yeah.
So I like him because he's got some different stuff. So
Yeah. Well, it's going to be it's going to be an interesting few weeks with our market. I mean, obviously the war is driving a lot of this as well. I don't know.
it's
I
wild.
guess we'll talk more. We'll talk more soon on the
Yeah.
next one. Yeah.
Yeah. I mean, I think my thesis on it is that although I think is disappointing in some degree for some people just because of the timing, we've seen worse markets from a rate perspective. So it's not.
We saw a worse market 14 months ago.
Literally last year. I mean, essentially last
The
year.
entire
You know,
last 2 years,
so
essentially.
I actually think if you look at it from that perspective and you zoom out even just a little bit, you go, this is still the best time of the last.
No,
2 years
it's still
in terms of
great,
rates, right?
It's
So-
still the best time. And the other thing is you can't time. It's like stocks. You can't
100%.
time the
You
market.
can't.
Real estate, you can't buy the market. You can't time the market. And I can tell you this: are there times over the last? I'm 45. Are there times over the last 45 years that real estate has dipped? Yes. There is not a single piece of real estate that we own. You own real estate. You own real estate. There's not a single piece of real estate that I own that I literally have that's lost appreciation or lost value. So I can, you can't guarantee anything about the
No, I
market.
was
But
gonna
what
say,
you can't, you
yeah,
can't
right.
guarantee. I backed up. You can't guarantee anything. But what you can do is, if you buy a house today, and you get, you pay a principal and interest, and you get the tax write off if you itemize right, and it appreciates, it is literally going to be worth more over time, right? The long run. I'm not talking 6 months. In real estate is still the best investment that you can.
Well, Tyler, talk about it. I mean, hopefully, maybe we can have this graph pop up. We'll get them to pop this graph
Yeah.
up on the equity graph.
Yeah.
Like, dude, that what you sent out earlier
Yeah.
today, like the amount of equity in this country right now. I mean, we all
It was
know
like
there's equity, but
65%, it was almost 70% of homeowners have at least 40% equity.
excuse me?
70% of the time it works every
65
time.
to 70% of homeowners have at least 40%.
40% equity. Can you think about that for 40% equity?
Well, and you hear
Come
about
on.
the.
I mean, that's
That's a lot.
well. So if you
Doing
look
a
at
$1 million
and go
property is
look at that graph again.
400,000.
Again, I hope they can put this on the
Thank
screen
you,
for
thank you,
guys.
Logan Motoshami.
But check this out. I was actually looking. I meant to bring this up to you. If you go, I think the graph went back to 2011 or 12, and it had negative equity at the
was in the
top.
corner.
And the negative equity was like this. I mean, it wasn't huge. It
was there. It was
but
there.
negative equity is bad anytime, right?
Yeah.
And it was like that. and it went
slowly disappeared.
and now it's basically disappeared to where like it does not exist.
It's
like
not zero.
It
but
is.
it's
It is like again,
less than
there's no
1%.
guarantees. You can still buy a bad property, but across the board numbers do not lie. To your point, it is an appreciating asset for the
But that's my
99% of
biggest
America.
argument when people, I literally want to punch people in the face when they start talking about crashes.
Well,
Because that's what caused. If you don't know, stop. It's not. It wasn't interest rates. It was over leverage. It was bad loans that were not underwritten, that were over leveraged. People not putting any money down. They weren't checking any documents. They would say they made $50,000 a month, and they're like, "You've got a 700 credit score, approved." And then they bundled them all up and they sold them as if they had underwrote them as real loans.
I did some of those.
Like
Liar loans.
That is what caused that.
Yeah.
So if we're looking at a graph like that, and we know it gives you the room, if the market dips,
Yeah.
people don't have to short sale.
Well, and that goes back to why Logan. So that's Logan Moshami's graph, and the reason Logan loves burning what they call the crash bros,
The gloom and doomers.
the gloom and doomers
Like, I
that want to
hate
go on social media. And the reason he likes to show these charts is because if the worst happens, and, these people talk about there's delinquencies. If people start going late on their houses in 2008 because of what was going on with some of the market, they were in bad loans. They lost it, right? There were foreclosures.
Well, there's also 100% finance. It was,
That's what we're saying.
They were over-leveraged.
But
They-
today,
But, I mean,
people
yeah, I just
having
wanna point that out.
40% of the equity, if people have to go sell their house, they have a ton of room to sell their house and not give it
they have a
away.
massive runway.
So
to
that
run
not
with
that
give it
means
away.
That means if their property values drop 40%, they're still breaking even.
Yeah.
Like, think about that for a second.
Well, it's we've had this argument with people that don't want to, again, it drives me nuts. I understand if you're like in your forever home and you got 2.5%, cool. Congrats. But you're talking about like some of these people are, 3.25, 3.5, and they're in a house and they're overcrunched and this and that, and they don't want to buy because they don't want to give up that 3.5. And I'm like, think about what you're giving up on future equity on this new house that you're going to buy. Plus, you're buying the house that you want. I was like, you're getting exactly what you need for your family. You're going to make money on it. I was like, what do you like? Yes, you're like, there's so many other aspects.
It gets negated by the appreciation that they got when they bought in
That's what
2020 though as well, right? Between 2020 and now, is it like 60% or something?
I don't know.
Depends on the
No,
market,
it's actually
yeah.
I've seen it. I can't remember what it was. It was a crazy number. Like it was like an S&P number over a 5-year span. So think about that. So that the rate gets negated by the fact that they're going to be.
Well, they got so much more money than they would have ever had before.
50% down,
Because otherwise,
right?
you're right. They would have been, in a normalized market over the last 5 years, they would have been selling their house and buying their new house, putting down 20%.
Exactly.
Now they're buying their next house, they're putting down 45%.
You
Or
just
they're
have a
putting
higher
down
rate.
25%, paying off all their debt.
Yes.
Hence, did you hear that? Hey, let's talk.
that's so
Can we
good.
talk about?
I'm so glad
Can
you
we
said
talk
that.
about livability
I'm
and
so
what
glad
makes
you said
sense
that.
on month to month? I'm going on a rant real quick. I'm going on a rant.
buddy.
It's
I already
coming.
know.
We
I
got a lot of
already
booms. No, listen. If
so
you were
glad you
watching
said
this
that.
and you got 50% equity in your house and you are 15,000 credit card debts and $700 car payments.
70,000 in credit card
So,
debt.
well, whatever. You know what? Name your
Whatever it
number.
is.
You're paying all this money, and you're looking over at your wife or your husband, and you're going, man, I don't know if we can go on this vacation because we don't have this, and we're trying to do this, but you got all this equity.
But Chad, we got a 2.5% rate. We
Oh,
got
yeah.
a 2.5%
Hanging on the
Hey,
rate.
our marriage is going to survive because of this 2.5% rate.
Hey, I'm at the water
Dude,
cooler,
but
boy. It feels good, but I can't eat. But it feels
This
good.
is real. This is like it
so
drives
good.
me again. I'm not talking to you 2.5% in your forever home and you're living life in flush right now.
You did.
Congratulations, but for those that's got 3 kids in school, private school, daycare, whatever, credit card debts, $800 car payments, you want to buy the next house, and your wife or your husband's dying for it, and you don't want to leave that 2.5, and you got all this equity, you're crazy.
Can I hold on.
You're thinking 20 years down the road,
Dude.
I'm sorry, you're
I got a
thinking.
part-
But the thing is, you got people that are thinking 15, 20 years down the road. What is my 30-year fix going to do for me in 20 years, bro? I might not even be alive.
I got to
Come on, can I get an amen?
I got to
Can
parlay.
I get an amen?
I got to parlay on
All right,
this.
Jesse,
So
I'll let you
got-
talk now. Shit.
This is
Talk.
no, it's the same thing. It ties it in, right? You can talk. You're going to come on. You're going to bring it. You got that same client who owes $100,000 on a house worth $700, and they're at 2.5. And they've heard on TikTok that every piece of real estate's the best rental property ever, and they're going to buy their next house and they're going to put down 5% at 6.5%. while they sit on $600,000 in equity, which, by the way, how much taxes, question, we're not CPAs, no tax advice here, this is just informational. How much taxes do you pay on the profit when you sell your house if it's been your primary residence 2 out of the last 5 years? What's the tax rate?
If you're married, it's half. You don't pay anything on $500,000, so it'd be zero. And anything above that,
$750.
They just change it.
It's $750. But regardless, it's zero.
Either
My
way,
point is,
zero.
most people, if
In
they
most
sold
cases.
their primary residence, the taxes are zero. But you're going to go put down 5% or 10%. You're going to liquidate your savings. You're going to have no money. You're going to go in with debt because you want to keep this rental property that you might profit $700 a month on.
And
so
you've
my
never
point,
wanted to be a landlord.
well, but be a landlord. Be a landlord. Take your $700,000 or $600,000 in cash. Pay no taxes. Put down a nice down payment on your new one. Pay off your debt, and then go buy 2 rental properties by putting down 20 or 30%.
Right.
That's my point.
Yeah. No, it's awesome. I mean, there's so many lost opportunities right now for people that are just so fixated. Well, but we say that now. I think, but to give the smart consumers credit here, what you talked about now, the rates, it's starting to balance out a little bit with the amount of people over 6% versus under 3%.
Yes. So it was 20% more, a little over 20% was at 6% or higher. Less than 20% was 3% or lower.
Yeah.
So basically 60% is somewhere between 3 and 6%.
Yeah.
Right.
But they've been if they're in the 3 to 4% range, that means they financed prior to 22.
Mm-hmm. So
they've been in their house for right now at least 4, if not longer.
Minimum 4.
And so families have grown. They're busting at the seams. So your point,
Their
they
house
don't
is
want to.
probably appreciated 7 to 12% a
If not-
year,
yeah,
if
yeah,
not
yeah.
more. But I'm saying conservatively.
But they don't want to leave their 3.5% because they can lay under their covers with it. It's
That's
like,
what
guys,
I listen. I mean, I'm not trying to get preacher here again, but I mean, I am a live life in the moment kind of guy now. You all know, like, I am more live in the life moment than I've ever been in my entire career, or my entire life, I should say, because it's just so much going on to where tomorrow's not promised. Like I literally thank Jesus. I thank the good Lord every single day I open my eyes. I wake up and I go, thank you for letting me open my eyes today and giving me one more chance at this life. I say that with full sincerity because that's how I now live. I have an 8-year-old daughter that's going to be 21 probably in a week or two, and I'm going to be an empty nester and I'm going to be crying every single day until I have a grandkid. But my point goes back to, I understand we got to be smart with our money. I'm not asking you to be dumb with money and go be reckless.
Yeah, there's a way to strategically
I'm saying though,
do
but
that.
you got to live. People got to start living life and making the most of their finances, but making the most of their life and creating happiness. And if that happiness is, we're going to get off this 2.5, we're going to go buy your dream home, honey, and our kids are going to go to the school that we want to go to. We're going to live in the neighborhood with the yard that we want, and we're going to pay off our car loan and our credit cards, and we're going to put money in the bank, and we're going to live. We're going to go on that vacation this year. Go do it. Let's go. Quit being dumb.
Well,
end of rant. That's my end of rant.
Let's add. I just want to add, if someone's not following, because I think sometimes when we say things like this, it's like, oh, well, you're just saying that because you want business, right? You want more loans. You want people to lead. Like, it's like we're trying to like entice them out of a good situation. Let me help you understand what he's saying.
0.
If I have a client who is moving, it's a move-up purchase, and their payment on their house is $1,500, but they're paying $3,000 a month in minimum payments on over-leveraged credit cards, cars that they honestly cannot afford. You start going going down the line. It's
tuition, schools. I mean,
these people. There are times where I see these people, and they literally have affirmed payments for like concert tickets.
oh,
You financed concert. Like, think about how insane
buy now, pay
that
later.
is. Like, it doesn't make any sense. But depending on their equity position, if I can take a portion, a chunk, 60, 50,000, if they're getting 400,000, and I wipe all of that stuff clean, they take the rest of their equity, they put it down at today's current rates, you could have a situation where their total outflow between all debts now is less than it was at 2%.
correct.
I've got a client.
It happens all the time.
I mean,
Yesterday, I had one $600 less.
it's crazy.
$600 less than what they're paying today, and they're sub 3%, but they're paying off debt.
And they're gonna live in a home that actually serves their family. It's where they want to be. It's what they envision for their life. And there is something to be said about the price of like just being in an environment that makes you feel good.
yeah. Say no more.
But you can do both. You
know.
can have it and have the math makes sense.
Well, Jesse talks about this. You talked about it in our sales meeting this morning. we're not financial advisors. We are not official advisors in life, but we do advise people on just basic decisions that they want our input on. They might not be thinking about that. Again, so many people aren't thinking that way. Because they haven't had anybody tell them. So it doesn't take a degree for us to have that conversation. I don't need to be certified to be able to have that conversation with you. And I think just the more we educate people and the more people open their eyes and realize and say, wait a second, I did just lose a dad, a brother. I did lose something. Man, I need to start living life a little bit. And I got all this equity. Let's go do, like, I've been putting this off and putting this off. Again, not asking you to go in more debt. I'm saying leverage this massive asset you got.
Safe,
smarter,
which is the thing.
It's about being smarter. And you go back to, there was 389,000 loan officers in 2022. We're down under 90,000, right? So many of those loan officers still today, the client calls in, they want to buy a house, they want to put down 20%, they want, and the loan officer says yes, on to the next one.
Yeah.
The difference and the reason that you're having the best quarter year, everybody's up, the people that we're working with around us, is because we don't take the approach of, yes, ma'am, here's what you wanted. We look at it from the advisory position and say, hey, have you thought about, what about this? Because it takes us more time, but at the end of the day, if we put those clients' needs first, like you're saying, Chad, dude, that's what it's about. That's what it's about.
Man, you kind of hurt my feelings a little bit right there. You said it used to be like 380,000 loan officers, now there's only like 90. Man, when I was like ranked, Scotsman guide, I'm like 2,500th in the country or something like that. Damn, that sounds a whole lot. 2,500th in the country sounds real good when there's 380,000 of you fools out there.
Yeah,
doesn't sound quite as good as there's only 90,000. Man, I gotta get in the top. I guess I need to get in the top 1,500 now or something.
You need to check. They came out yesterday.
I know.
Scotsman came out yesterday.
For units, I was like 1,500 and something.
You were 1,500?
So you're right there.
I might be a little. I might be under 2,500 now.
I want to put that in perspective.
I'm being silly, but put that in perspective. We're talking in the country.
Well, but I love what he's about. I already know what he's about to say because it really Well,
I wasn't going to say that. I'll be finished what I was going to say, and then you can say that.
Okay.
So when you talk about 90,000 loan officers nationally, and we're talking about a guy that's in the top 1,500, a guy that's probably in the top 1,600 because y'all closed about the same number of units last year.
He beat me by a few.
That's bonkers. So you're talking about in the top 2%, 1.5%. Call it 1%, really.
Whatever. It's really 1%.
It's wild. So kudos to both you cats. One day I'll live up to y'all.
I mean, now, Mr. Scotsman, let's just go ahead and put it out there because you didn't like the new rankings from
Housing Wire.
Housing Market. That's fake news.
But I'll talk about that in a second.
All right,
why?
all right.
But what was your
I wasn't going to
Scotsman
say
guide? I'm asking. You didn't bring it up. I'm asking. What was your Scotsman guide ranking?
I was 35th.
35th.
Out of 90, let's call it 94,000 loan officers in the country.
35, yeah. So
that's bananas. But here's
I bow to you, Sensei.
Now listen, I would argue, so you said 35. I would argue if it was a level playing field, and I'm going to explain what I mean by this, you're probably closer to top 10. And what I mean by that is there's people on those lists, I'm not going to name names, I'm not going to say companies, where, and I know you've been accused of this, but it's hilarious because all of us show our own individual production.
Yeah.
Where they have teams, it'd be like 5, 6, 10 of us collectively putting our stuff under one person's name.
I can tell you
just
the
like
number.
you would with a broker.
I can tell you the number. I ran the numbers yesterday. If the three of us, not even just our sales floor, which, again, would be a different number. If the three of us put our numbers together, like some of the people do on Scotsman, we would have been number 3.
Like, that's just...
nationally. So that says a lot about what we're doing. Yeah. It says a lot about the bank. I tell people, you've heard me say this, both of y'all, people don't come to me because I'm a nice guy. I am a nice guy, but it's our products. It's our people. It's our operations staff. We couldn't do it. I say this all the time. Tomorrow morning, you'll hear me say it on our all-staff call. We couldn't do it without the people that let us do this and North Point and all the things we do. So, it's great to have accolades, but really our clients.
This parlay is perfect because I got something for Tyler. So, perfect talking point. Because I do feel like, our company in general, but listen, we're funding fathers, baby. We talk about ourselves on here, right?
Yeah,
let's give ourselves some props. No, we are all built similar to where we want the best for people. We're honest with people. We give you advice. We tell you the way it's going to be. We don't win every deal, but we win a lot, right? But we don't win every single deal. And then but hear me out on this, Tyler. You had a client about 3 or 4 weeks ago that you dug in, you found a problem. Real quick, let me preface this real quick. Everyone out there always wants the best deal, or not everybody. We have people sometimes just want to be in the right hands. I take that back.
Like,
people just want to be in the best
Well,
hands.
they're trained. They're trained.
But some people are trained. They are wired to be like, I am getting the best. If I save 2 cents, I am going to go save that 2 cents, and I don't care who I work with. It is what it is. That's just how those people are programmed. Right. You had someone that was like that was so dead set on rate, crazy, but you saw a problem. Mm-hmm. And what did you? I want you to tell the people the problem that you saw and how this client had to come back.
And it's also some commentary on when you're dealing with these people that aren't true professionals, these internet lenders that have no relationship, they don't have any skin in the game, honestly.
And real quick, it doesn't have to be. There's some professionals on the internet. There are.
Yes.
There
100%,
are. We got some at North Point, but
100%.
just people who just aren't professionals.
But I find that it happens more with that
it does.
crowd because they're not out there like creating relationships and creating business, right? So there's no like loss of relationship
if they don't
if they don't execute on what they promise, right?
Correct.
So they can say things that are just outlandish that
there's
don't
no
even
repercussion
know.
for them.
Yeah,
Zero.
they don't even know if it's true, but they're just trained to just say yes enough to try and get them far enough along, and then just see how it goes. That's essentially how they operation.
Well, you told the client,
I told him literally verbatim. Mr. Client, I love you. He's first of all, he is like my biggest fan now, and he was super nice the whole time, which I respect. I said, Mr. Client, I love you, but they are lying to you. The math is the math. I'm telling you, they cannot execute on 5% down Fannie Freddie at that rate. They can't.
They can't do it at 20%.
They couldn't even. Well, then it was real funny because then they couldn't even do it at 20%, and then it was, well, we need your in-laws to co-sign.
We're talking about a grown man.
With
co-signers are great, but
with 20% down. So we went from 5%, no problem, you're good, to you need someone to co-sign for you
with 20% down,
and you got to put 20% down.
And with the co-signer, they still couldn't.
And they still couldn't execute it with the co-signer because they didn't understand how to document trust income. So all of that to say, I said very nicely, if and when, I literally said if.
I think actually, you said, did you say when?
I said if, actually not if, when that happens, call me and we'll get it done. That was my exact phrasing. I wasn't mad about it. I understood, but I was like, the only way he's going to get it is if they tell him.
It's like a buyer losing a house because they don't listen to the real estate agent.
Yeah.
Like, hey, listen, this is what we should do. Buyer doesn't want to do it because they want a low ball. They got to learn. They got to learn the hard way sometimes.
And to his credit, and I told him this after closing, how much I respect him for doing this because you and I both know most people have a hard time with this.
They wouldn't have come back to you.
He called me and he said, well, I guess I have to eat crow. And we both laughed.
That's a cool dude.
He is super cool.
Yeah. I want that client, for sure.
He's awesome. So we kind of like giggled and I was like, okay, well, we'll go back to the terms we previously discussed. I'll get it set up and we'll get this rolling for you.
That's awesome.
Closed 2 weeks later. After they spent almost 3 just fumbling around for
it just goes. Oh, go ahead.
Not all lenders are created equal. And it goes back to the same thing. Like that 32% that we talk about and we preach about the portfolio, like that's a portfolio loan. That was you figuring it out, but also that was a portfolio loan. That wasn't you didn't figure out trust income for Fannie Freddie. That was a North Point portfolio loan. So
he put 10% down.
All banks aren't created equal.
With
and
no mortgage insurance, by the way.
The client was happy. The realtors were over the moon, right? And that's to your point, that's what we do.
You just dropped a nugget and kind of just went over it real quick. Man, that 32%, like, whoa, like that's a
10%
down with no PMI.
Yeah, no PMI. Our portfolio doesn't have PMI on anything.
That's what I'm
no
saying.
PMI on
but
anything.
I think, what I was going back to is 32% of the bank's volume, closed loans last year, portfolio.
Yeah, so to put that in perspective, we closed about $2.5 billion, so almost $1 billion of our total production was portfolio. Which for the client or the realtor, what does that mean? That means that literally, if you line up 10 deals, we are going to close 7 days a week and twice on Sunday. We are going to close more loans than the next lender because we have so much opportunities to put loans in the portfolio.
Well, I talk to my real estate partners all the time, and I don't know that you can talk about it enough, right? I mean, we used to. That's your main thing is like talk, preach, sing to the stars, whatever. Is that if we are closing 32% volume business, that's portfolio lending. I mean, that's not to say that there's not other people out there that can do pieces of what we do. They can, right. But across the board, that number is massive, and there are so many buyers out there that are getting told no.
Self-employed clients,
clients, and people that they need a bridge loan. Like, oh, can we go back to equity? Like, what are we talking about here? Like, we got people trying to buy houses right now that are sitting on 40% equity.
Yeah, they
can't buy their new house because their money's all tied up into equity and car payments. Tuition, they ain't got no money. They don't have any liquid. Yep. It's all in that cash. Hey,
or it's in a retirement account.
That's
right?
Yeah, or retirement. IRA. Hey, Mr. Lender, I want to really buy a house, or Mr. Realtor, I want to buy a house. Well, okay, well, let's go buy a house, but I don't have any cash. Look at all this equity. Oh, do a bridge loan. Well, guess what? Not everybody does bridge loans.
Hey,
right?
Chad, you've got to be contingent.
That's what I'm going.
You've got to be contingent, Chad. Well, we really want it. Well, the contingent's not going to get picked up. I mean, we have 3-4 different bridge opportunities. Guys, I can't tell you enough. Like, I'm telling you right now, self-employed clients, we're pros. Bridge loans, I mean, for us, like, it is a game changer. And, you know, we had this much of it at Commonwealth Bank. It was nice to talk about. Like, love that we had a little bit, but, like, that is something in this market as it heats up. And we talked about yesterday, the spring market is here.
Spring, baby.
17 contracts in the last week.
Stripe life, baby.
70
Stripe life.
70 credit pools in the month of March.
Yeah.
That means 70 different families did an application.
Because people are seeing the writing on the wall, man. But, listen, if you are watching this right now, a realtor's most hated word in this world is contingent.
Or no.
Well, or no.
Yeah.
Contingent. That's 1A, 1B, right?
Yeah.
Then so
dressed up now.
And that's the thing is like, listen, don't be sitting there thinking about how you're gonna claw pennies out of your savings account, call mom to get this, and go rob little Johnny's piggy bank because you want to buy the next house and you got to have 5% to put down, but you're sitting on $125,000 of equity and you easily qualify and your lender can't do it. Hey, 3 dudes right here.
Ring.
It's
telephone.
Funny. It's funny that you say that too because my boy, I'm not gonna say names. I'm gonna
502-4929.
My boy, he did his app earlier this week. He's like, hey, like he's a financial advisor. He's getting 2 big checks, like mid to late May, right? So the plan was we're gonna wait a little bit so that I have time to have those hit. Guess who's writing an offer today? So today is April 2nd. So he wants to put the 20% down because he wants to be able to not escrow and all these things. He has it with those checks coming in, but he doesn't before then. And they want to close before then. Well, guess who has like $90,000 of equity in his house?
Yeah.
So I said, well, we can solve that problem. He's like, what do you mean? Like, we'll pull 80, 90 grand out of there, use it. And then when you guys sell your house, you're good.
Education, baby.
And he was like, oh my God, I didn't even think about that.
Well, because most people don't offer it.
Solved.
Yeah.
Well, because guess what? They don't think about it because their bank doesn't do them.
Right.
Most realtors, I had like almost identical conversation yesterday. I told a realtor, I was like, the sooner you can get a client to us, they're out looking, they don't know what they know. They don't know if they can do a contingency or if they have to do a contingency. The sooner they talk to us and we educate them, the better. Because again, the lower rates fall, the more buyers come back to market, the more competitive it gets.
Creativity is,
I love it.
But it's like I've had so many reps at it now that like, I don't even blink. Like I know I had one this morning. It was the lady I was talking to you about in Montana. And she dropped on me. I didn't tell you this. So I called her before we came here. Told her I found a way, because they were going to buy a rental property. I'm like, there'll be some type of rental income. We can use that. It'll work, right? Then she drops on my head, oh, do you want my husband's assets? Yeah, like what? I mean, how much was it? Any guesses?
$1.3 million.
$2 million. And I laughed like the heartiest laugh that I've ever laughed in my entire life. And I said, had you told me that yesterday, I would have sent you the letter yesterday without the app.
Right.
Because I already understood like this is someone who's been told no by 3 other lenders, by the way. I already knew how we could formulate that. So it just, the confidence too of knowing it's not I'm not guessing.
No,
Like, I know
Guessing.
we can do
That's
it.
I
awesome.
quit guessing a long time ago. Yeah. So can we go into something on non-mortgage?
I got a few
love
things,
it.
but yeah, I can't wait to hear it.
I didn't know if y'all were going to be
I
ready
can't
for
wait to hear
this.
your freezing cold college basketball take.
We'll hit on that, but this is different. So that rocket yesterday, the
Artemis
it's gonna leave low orbit for the first time in 58 years. It's
Yeah,
gonna be
they're
the
gonna
first.
go chill. They're gonna go circle the moon, take some
It's
pictures.
gonna be the first rocket that went out of low orbit in 58 years. 58 years since we went to the moon, but we're not stopping. We're not gonna stop because, why would you stop at the moon when you were there 58 years?
Why would
ago?
you travel 6 days? I mean, yeah.
What are you insinuating, Jesse?
I'm just wondering, y'all know my take, so y'all call it what it is, but in
Conspiracy theory.
I just struggle. I struggle with
dun, dun.
Pee Wee had some old cars, right?
Uh-huh.
Pee Wee had some old cars.
Yeah, well, he's a big muscle car guy.
So I think about 58 years ago, which was when we went to the moon, right? Like I think about like a computer back then. I think about phones back then. I think about cars back then. And we went on the first try with no hiccups.
That Commodore 64, those were pretty special.
Bro, that was in the 80s.
That was 80s, actually. That's all I know.
We're talking 60s, bro.
I don't even know what that was.
The computer was bigger than this room that we're in, right? Literally, the personal computer would have not fit in this garage. So my point is, in 58 years ago, we go back on one shot, and this time the reason they're circling the moon, part of the reason I read it this morning, you know why they're circling the moon?
I actually did not. Because they're going to go back in 28. So what are they getting?
Well, they're circling it because it'll channel the moon's energy, so they don't have to take up as much fuel. And so in this case, it goes up and goes around. And so my point is how they went up the first time 58 years ago. First try, no hiccups.
Plant the flag.
Jump around,
Just
hit
chilling.
the golf balls. And yet we haven't been back in 58 years, but this time we're just not stopping. I want your all's take on it because I think about cars back then.
I've made fun of you for a long time because of your conspiracy theories and the whole moon talk. I never truly even thought about it, but
I've said
I got to be honest with you.
The one thing that I have a hard time with that he has said, and I have said this before too, is they spend so much time about like weight distribution and thinking about the size of computers at that time, like, and we have more power behind the rocket now than we did then.
We have 10x now than we had 10 years ago, let alone 58.
So like, I have a hard time with the weight piece of it, right? Like, it doesn't. And then, like, even yesterday, we had very limited visibility on like what we didn't see anything I didn't, at least from the inside of the rocket.
I didn't see it. Yeah.
And there's videos like clear as day
Oh,
of
bro.
them bouncing around.
Come on.
The moon. Like it seems infallible in some ways. Think
about the telephone back then. Literally, Chad probably had a cell phone because Pee Wee, they were rich back in Lebanon back in the day. But literally, like in the 80s, we had a phone that we picked up that you did this, right? In the 60s, you picked up the phone and you talked to the operator and you said, give me A123. But yet we have videos and we were talking to the spaceship that was
the communication
6 days away.
Yeah,
6 days away.
I have a hard time.
Anyway,
I do.
I
have
just
a hard
wanted
time
Jarrell's
with it.
take on that.
comment below if you believe we went to the moon or not.
Caroline Cronin, if you're listening,
I want to know. Comment below and tell us, did we go to the moon or did we not go to the moon?
I will say this though, it was really cool.
I was
to
fired.
sit with my son yesterday, who like is old and he's a little over 2.5, old enough to he knows what a rocket is.
Yeah.
And we counted down with him in the living room, and he was all pumped up, and that was cool.
we were at basketball practice. I would have loved to. We'll go back. We'll watch it. We'll watch it tomorrow.
You think there was any like sort of like motive for them to do this on April 1st?
April Fools. Yeah, maybe.
April Fools! We're going to the moon,
just
baby!
kidding. In all seriousness, it was supposed to go off like a month and a half ago.
Yeah, but it didn't.
It didn't. April Fools.
So they just perfectly waited until April 1st.
I wholeheartedly believe that we are going and circling. I don't believe this is a conspiracy. I don't believe we went in the 60s. But, it's funny. When this got fuel, right? When this trip got fuel? When China said that they were going to explore the backside of the moon and get their minerals.
Yeah.
So it's always funny. We're racing somebody.
We're that one. We're that guy that's like,
hey, here you go.
Hey,
I'll put my hat's on, you know. So
we're that guy everybody knows. We're like, yeah, like, you know,
Unsolved.
did all right
This
last
is like
year. He's
unsolved
yeah.
mysteries here, you know.
He's like, yeah, I did $1 million last year. Like, we're that guy. Like, oh, you're gonna go to the moon. Oh, we're gonna not only we're gonna go to the moon, we're gonna circle it, and then we're gonna take some pictures. Like,
but I'll be damned. I'll be like, you come to me, like, boss. You mean tell me you'll fly my ass to the moon and I don't get to stop by it? I don't get to stay.
That is
I don't get to hang tight for a second.
Hey, but for real, we better have the best photos of that moon.
high def. They better be in 4K.
I'm telling you right now, like iPhone videos.
I want it to jump
out that
off
window.
my TV screen.
I want to see the skyscrapers and
Bro.
I want to see
It's gonna be that same fuzzy ass shit. I'm telling, dude, I can't. I'm actually like really excited to see it because it's either gonna be awesome or like it'll just confirm. like,
Well, we're supposed to
the past
land
doesn't
there
make
because
sense.
they're putting a base in 28 supposedly is what this is for. I'm sorry.
Well, let's talk.
I had to go.
All right, so now current events.
I want a house next to the Tranquility Fountain.
Current events. All right, boys. March Madness is here. We're almost done. Actually, by the time you watch this, it will be over. So we're gonna make some predictions today. Before we do that, though, you know, we just had Dan Furman on from University of Louisville 502 Collective. Talking NIL and that portal. Again, by the time you're seeing this, the portal will be open. It's going to be chaos.
Bingo.
Louisville. I don't know about Kentucky. I obviously haven't followed. Louisville is expected to have this many players off the team from this year, back on the team next year. 0.
You tell me Michael's not coming back?
Don't even get me started on that bum.
So brand new
0.
platoon swap.
That's every year,
0.
bro.
Like 0. Not a
No,
single.
we had a few. Yeah, Javon Hadley came back. You
Yeah,
had-
no, last
I'm
year
just
we had.
saying NIL.
No,
I get that.
We had
But,
people
like,
come back last year. This year,
back.
I mean, like, now I
Some
say
of them
right now,
graduated.
and let's be honest though. Hey, I love my boy PK, and just my quick little talk on this real quick is I think, listen, UVL and UK are built differently. These programs are built different. The fan bases are psycho. They're crazy. Mark Pope he's in trouble.
He's under
He
fire.
was I listened to this on Diener this morning. He's his own worst enemy from previous in the year because early in the year, I forgot that he said this. You know, late in the year, he didn't want to talk about the 22 million. The fans are everybody's unrealistic. I mean, he called the team a Ferrari. He literally said, we've got a Ferrari. Like, he went on record. So, like, when you set up the expectations and your fan base, I'm a Cat fan. I'm not the fanatical Cat fan. Like, I'm not that. Like, I love
base.
him.
We're talking the base. The fan
base,
bases.
the base is fanatical, but at the end of the day, like, guys, with the NIL, you've got the playing field is level.
Well,
That's why this
leveled.
That's why this tournament's actually been really like almost every single game, with the exception of a few, has gone down literally to the wire.
Tennessee.
And so it's been. I think the parity, like you said, it has flattened.
But I mean, look at the coaches in the Final Four.
Yeah.
I mean, what's his name? Tommy Lloyd from Arizona.
Yep.
The cat from Illinois. He's cool. I can't think of his name right now. Then you got
Arizona is Sean Miller, right?
no.
Lloyd, he got fired.
Sean Miller's at.
He's at Texas. That's right.
So
he moved
Dusty May.
Yeah.
So
Dusty May's a dog.
I guess, and we were at the casino last year at River City Gambling when we were downtown checking some stuff out. We walked in there. Dusty May was expected to be U of L's next head coach. Like, it was almost a done deal. Actually, it had been Dusty May expected to be.
Yeah, it was like
This is another topic. Man, I can't wait to revisit this.
Can you
because
imagine?
Josh Hurd right now apparently pissed Jeff Brom off so bad that Jeff, it's rumored, kicked him out of his office because of contract talks, because there's no extension. And I know I'm throwing some speculations out there, but apparently the blood is not good because Josh Hurd is nickel and diming some different stuff, which is why apparently, inside information, we lost Dusty May because Michigan stepped up. Josh didn't want to pay him. So all this being said is like this nickel and diamond bullshit. I understand it. Like there's a hard stop sometimes because like where's the money coming from? But man, you're in a spot right now to where like look at the coaches. They're in the Final Four. Dusty May is in the Final Four. Like it's big boy time.
Do you know? So I heard this morning on Diener. I'm Kentucky fan that just happens to listen to Louisville sports radio for the 3 minutes that I drive to work. Do you know who's paid more than Jeff Brom? A lot of people.
He's like 6th in the ACC.
But where did he come from? Where did he leave?
Purdue.
The Purdue head coach, who has a losing record,
makes more money.
Is paid more than Jeff Brom.
Are you kidding me?
Yes.
That's insane.
Yes.
So I don't know. It's all kind of like dropped in the last 24 hours to where like Jeff Brom had to apparently pull out his contract that he got from Penn State, showing $10.5 million offer because Josh Hurd didn't believe it. again, this is all
Rumors,
talk.
who knows?
But anyhow, it's very interesting. But NIL, it's just kind of wild that, but you got these guys like PK. I mean, there's like three of his staff members are gone, man. He had to like cut ties with some of his boys because he realized this year was such a bust. And it's like, man, these coaches are, I mean, it's year to year, but you don't have that much time, you know?
Dude, I mean, Will Wade
going back to going back to LSU.
And talk about LSU. Did you hear what Diener? Thank you, Diener. God, man, he's just nuggets from Diener. Did you hear what? What's the football coach at LSU?
Oh,
from Ole Miss, Kiffin.
Lane Kiffin.
Did you hear what Lane Kiffin got them to up the NIL to?
I think like a couple hundred, like 100, like for him.
No,
but like for basketball and everything, they're expected to spend like
everything, but football alone, it's like 40, 50 million.
60 million. Yeah.
Dude.
They're like putting like some 100 million. I don't know. They're putting something stupid together.
I mean, the money in it is, but it makes you wonder too, like before NIL, like,
how much
these kids weren't getting
there's
anything.
there's no makes you wonder. There's why Nick Saban and John Calipari and all these guys had their contract success.
Hold the phone.
Anthony Davis,
hold
my
the
ass.
phone. Did you, by the way, did you hear Ricky P's quote yesterday?
Man, Ricky P. I missed that guy. Yeah,
Me too. They said to Rick yesterday, they said something along the lines of why college basketball is like at its all-time like high as far as fandom.
Product's way better too.
And how the NBA's down. You know what his comment was? St. John's. He basically said St. John's is doing well. So it's why college basketball is rocking. That dude's a dog. That dude is an A1 dog.
There are a few people that is a bigger Ricky P fan. I love Ricky P. But I have to say, I felt it was kind of a loser crybaby stance on his commentary on, well, you guys should interview the losing team first so they don't have to sit here and watch everybody. I think that's soft. I personally think that's soft.
No, I missed this part.
I think that's soft.
Can we
these
give
are
context?
grown-ass men. They lost.
Can we give a context? So he's in the locker room. They've lost. Dude, you're talking about the most competitive people on the face of the planet.
No, the kids were crying.
They've just lost. Rick Pitino, the team, they're devastated, right? High expectations. And they've got to wait over an hour for the winning team to celebrate on the floor, then come in and get interviewed for St. John's to then finally be like, yo, we're ready for you.
I have bad news for you. I've been in that locker room. I've done that.
Yeah.
Like, we were in a Final Four. We lost. And I had to sit, me and all my brothers cried for 30, 40 minutes waiting for us to go do our press conference after the game. I've sat in that locker room.
You got to admit the man's got a point. He's got a point.
No. You lost.
I don't have
people don't want to hear from losers right after the game, bro. That is life.
Yeah.
And I think it is a bit hypocritical.
Rick, if you're listening.
Based on some of the things.
I still love you, Rick.
Ricky, I love you.
Yeah.
You got me 100%. I'm just saying.
If we part ways with Coach Cal, you can come back.
It's the
or
same.
Coach Pope.
You can't go from, I'm going to teach these boys life lessons and life's going to kick you and you got to stand up and blah, blah, blah. And then turn around and say, well, we lost, so we should get interviewed first.
I know it is. If you frame it like that, it is a little bit like it's adversity in life. And he had one of the most famous speeches with the adversity speech.
It's awesome.
Yeah.
And it's real.
So I get it. I don't take his, I think at the end of the day, he is a sore loser. I mean, I'm a sore loser. I'm
the best coaches I've ever played for are the biggest sore losers.
Yeah. So, I mean, yes, it is like a little bit of like, oh, all right, Rick, come on, quit being soft.
We need to get Scotty back on that.
But at the same time, he is a sore loser.
I think Coach D would agree with what I just said.
I bet Scotty would.
I think he would.
No, he'd be with Coach.
Listen, I'll say this.
He was saying,
before we go to our picks, though, I'm telling you right now, I'm on record. I got a lot of good UK fans that I talk basketball with. The few smart ones, not a lot of you. A couple of you though.
Well, you didn't mention me, so I guess I'm not in that group. Wow.
But man, I had like 50% telling me like when they were on the coaching search with Pope that they were like, man, I don't want Rick back. And I was like, you have to be out of your mind.
That's just called
like you have to be out, like the fact that I'm telling you right now, the fact that UK did not go back and get that man for 10 because he's got 5, 6, 7, 8 more years in him easy.
I would have taken him in a second.
Yeah, it's crazy. So all right, well,
Louisville take him back.
I would take him back today. I love Pat Kelsey. I mean, I think he's great.
He's still
got a lot to learn, and he better figure it out in the next 12 to 24 months.
But we're talking about probably the single best college basketball coach.
That's one of the greatest minds of all time. So
no dispute, no doubt.
All right, well, Tyler. So we got UConn versus Illinois. So we got Illinois People sleeping on them.
I think
UConn
that's
just
easy.
wins, baby. Dan Hurley just wins.
I'm putting money on
Except when he
Illinois.
didn't against St. John's.
I'm putting money on Illinois personally.
Who's in the Final Four?
I was talking about the regular season.
The regular. You're talking.
UConn
Practice? We talking regular season?
Talking about
Regular
game.
season don't mean shit.
UConn's
son.
in the Final Four because Boozer didn't just hold the ball.
Yeah,
I mean
but they were
Gotta
down
love-
21.
gotta
My
love
point being
little
is
brother.
they don't give up. UConn, that team
No.
right there.
They're tough.
You better play until it says
They're tough.
0.00.
Down
they're
19
tough.
Down 19 in the second half.
They're tough. I think Illinois is tougher.
Yeah, but you got Arizona and Michigan,
So
which
hold
are
on.
both.
You're taking Illinois. Who are you
I'm
taking? You
taking
didn't
Illinois.
say. Who are you
All right,
taking?
so Illinois over UConn.
Yes.
All right.
Can't move on.
I'm going UConn. I'm taking UConn. They were getting 2.5. It's down to 1.5. So I think I'm going UConn just because I take winning pedigree. Illinois haven't been.
No,
Did you know
Hurley
this? Illinois is a good program. Don't quote me on the stat, but they haven't been to the Final Four since like 05 or
Long
something.
time.
21
Since
years.
they beat us.
21 years.
In 05, they beat U of L. They were good. Darren Williams, stud, a couple other cats. They were beasts. So, only thing I'll say, boys ain't been there in a while. UConn won back-to-back titles just a few years back.
Illinois, those kids that are playing for Illinois were not born when that team played. So you're talking about that.
right,
I'm
I'm
talking about
going
UConn.
Well, I was gonna say that really from the coaching pedigree though, those kids they're both. That's a whole new UConn team
Yeah.
than either of those teams.
No, but
No, Caravan, they got Caravan. That's a
Caravan's
bad
like that.
boy,
And
dude.
he's a bad motherfucker.
Guess what?
He's
He's
a
a bad
dog.
motherfucker.
And he
I
is
don't
bad.
disagree.
And then Terrace feels like he's been around for a
They're
little
tough.
bit. So I'm
Their
just saying,
roster's tough.
I'm just saying, dude.
But
They,
Illinois is gritty.
Yeah.
Those
They
guys.
are.
all right, I'm going UConn. Tyler, you're Illinois.
Illinois.
I'm taking UConn plus 9.5.
No,
I
get out
teased
of
it.
here.
I
Oh,
teased
there's
it
our-
out.
We are
I'm
not getting
going-
into this right now.
I'm going.
He's gonna have
Tune in Saturday
He's
at
gonna
10
have a
o'clock.
20 leg. He's gonna
We'll
have
have
a 20
fantasy
leg
football
parlay.
news with John Anthony over here.
He's gonna have a 20 leg parlay. One of them is gonna be a cornhole.
For a nominal fee of
The other one's gonna be darts.
$59.99, you'll get Jesse Cronin's 22 pick
$10 parlay bet for 50 grand.
9-point parlay.
I'm going with UConn because I will say this. Now we're not getting side tangent. We'll get on the other game. The story about Caravan and his mom,
Yeah.
Is cool.
immigrants,
Nah, it's cool.
like first generation. So I'll be
right.
cheering for UConn.
So we got Michigan, Arizona. I'm going Arizona just because I don't like Michigan. Their fans were awful when we beat that ass back in 2013 to win that title. And I've never liked Michigan since. So just for that reason, and I was a Fab Five guy, man. Fab Five. This
love
is
the
way.
Fab Five.
This was before you were born. It was the
years.
best 5 freshmen ever assembled on a team. I loved Michigan until we played them. So anyhow, with that being said, screw you, Michigan. Arizona to the finals.
Arizona.
This one's hard for me. Because I think they're very evenly matched, and I think they're both coached well.
Oh, they're both unbelievable.
I think I'm gonna have to go with my man Dusty May, bro. It's a Big Ten.
Dusty's bad.
Big Ten championship game is my.
Oh, they're dogs. They're huge
Yeah.
too. They're so big.
I think
They're
that's my
huge.
bet. I think they're gonna beat them down a little bit. But Arizona,
No, Arizona's loaded.
they
I
go
heard-
hard, man.
They're loaded.
I heard this morning from one of my best Michigan friends, Mr. Daniel Winslow at the office.
He even admits. He even talks about how Michigan fans suck. So you know
He
what?
does.
So like,
He
yeah.
does. But Michigan, he said this today. Michigan has shot like 44.5% from the three in the tournament. So
But
if
they've
they
also
don't,
drummed some teams though. It's not like
that's
they
my
just won
point.
by like
but if they
3.
haven't, but my point is, he said this. He's like, he's afraid. He's like, we don't shoot like
All right,
we
who you got?
have.
Which is
Who you
fair.
got?
Arizona.
Arizona. So you
taking
Arizona, Michigan.
just on the other
All
side
right,
of
so
both
I'm
of them.
going Arizona, UConn in the finals. I'm taking Arizona.
taking
And
Arizona.
if they do, I'll get to finish second in the office pool. and
That's what this is about.
Gray Paris has already claimed stake to the $50 I'm going to win. So
Are you sure you do?
because if Dustin will win, Dustin will come in first. I'll come in second if Arizona wins. If Michigan wins, Brooks. By the way, shout out to Brooks Bauman.
You will. I have Michigan. You're
Chris
right.
Bauman's son picking the
Final Four.
what's Brooks in 6th grade, 7th grade,
5th grade.
5th grade. Pick the correct Final Four.
Pretty fire.
That's pretty
fire.
So I'm going Arizona to take the title down, baby.
Yeah, I actually have Michigan in my bracket, but I took Arizona. I'm going to take Arizona.
You're going
too.
Arizona?
I think so, yeah.
You going Michigan or
I'm going
Illinois?
Michigan on that one.
So all 1 seeds. All right. Well, guess we'll find out. Here soon. So anything else, guys, before we head out?
Disney World.
Disney World. We'll have already been back from Disney World by the time you see this. So
Disney World.
Is that where you guys are going?
hopefully we're doing this podcast again. Hopefully I don't get stolen down
Sick.
by Mickey Mouse or something.
fun.
Put some
Heck, are you gonna go
secret
to
tunnel.
Universal at all? Is it
No,
close?
we're going to Hollywood Studios, Animal Kingdom, I think Epcot, and
I wanna go to
Magic,
Universal, dude. They
Magic
have so much-
Kingdom.
Harry Potter World and Legoland.
That's
and
all
that shit.
fire. Yeah, we're excited. We're
Yeah,
excited.
Mario Galaxy
Listen,
World or whatever.
spring season's here though. Honestly, with that being, I mean, everybody's happy right now, man. People are going like the mood.
weather's
Can you see the
nice,
mood? Like, I mean, that's a real thing. And
Yes.
Sunshine.
and listen, go to my Facebook and look at my stripe life. God, my yard looks good. I ain't gonna tell you.
Mine
so.
does too, Chad.
Your yard does
mine looks
not look
terrible.
as good, but
I got to go with Home this year.
No, that's all I got for the day, boys. Anything else?
Yeah, no, we got to wrap because you've got to go pack.
Yeah, I gotta go. Actually, I don't know if I'm gonna get to stripe my yard before I leave.
Are you going to Target for real?
I can.
Can you give me a couple graphic tees? I need those for the park. Shelly Cronin did not give me any graphic tees last night like I asked for. So.
This-
I
to be
don't know why
continued.
you put that on camera.
To be continued. Yeah.
I asked for it. She got me socks. So anyway, that's it, boys, from the funding table.
Cool. The funding table.
From the closing
Funding
table.
I mean, I guess it could be the funding
Could be the
table. I mean,
funding
it
table. I
technically,
think the closing
when we
table
are
is-
setting there, the loan is funding.
From the
Funding
closing table,
table.
with the funding fathers.
Yeah,
One of y'all can take it away. I'm
No,
I obviously dropped it.
Hey, no, fun session. Glad we got to get in here just with us three.
Yeah.
Just kind of break some bread, talk all the market stuff right now, rates and all that's crazy. But on behalf of myself, Tyler, Jesse, thank you for joining us here at the closing table with the funding fathers. We'll be back. We got some cool guests lined up, so be staying tuned. Watch this. Boom. Let's go.
See ya.
Peace. Deuces.